Before we start, I just wanted to acknowledge the traditional owners of the Malakadi people here on the land that we're standing on today, and acknowledge their elders past and present, and also acknowledge that, you know, their land has never been ceded, and we've got a lot to learn from traditional custodians and how we can meld the two worlds of regen ag and their traditional food ways as well. I think it's an exciting path that a lot of us are only just discovering. So welcome to this morning's session in the plant tent. First up, we have Mike van Niekerk. Mike has a rich history in corporate Australia, working in funds and more recently in impact investment, and is a bit of a brain on all things natural capital. So he's going to demystify that for us. So I'm sure a lot of us in the room have questions about natural capital and its role in the transition to a more sustainable planet Earth. So hopefully Mike will have a few answers for us. So please make Mike welcome.
Hi everyone, you can hear me? All good? Yep. Mic up a bit. That better? Very good. First of all, demystifying natural capital. It's pretty early days, and I know some things, but it's all unfolding and very new to a lot of people. So I'll just say that up front. But let me just quickly give you a bit more background to myself. I've worked 25 years in corporate life. Most of that was with AMP in superannuation and funds management. So it's kind of come from that background and understand that world of where the money is, where it's flowing across global systems, and how it kind of flows into various investments. And obviously thinking about it from a superannuation perspective, you know, where that fits in with the asset managers in the whole finance system. I left that in 2015, and for the last 10 years have really been working in impact investing, have had a strong interest in ocean investing, impact investing in oceans. And, you know, through this journey I've been doing a little bit of work in natural capital as well. So in 2015, I left corporate life, went back to university and did a master's in sustainability, and then from there did a dissertation on the scaling of impact investing, and that really got me into the impact investing world. At that stage, I was advising a lot of the superannuation funds on impact investing and responsible investing, and that has a whole range of styles of investing, from exclusion styles and ESG, which people would have heard a lot about. But I kind of focused in on impact investing. And today I'm doing work with some of the asset consultants and the superannuation funds on this issue of natural capital and helping them really increase their knowledge. And it's really just an education role, doing some small projects and some advisory work. But they're all looking at it as well, trying to get their heads around it, even though they've got teams of very smart people who know a lot more than I do. But they're very cautious, and the markets are quite uncertain in terms of where natural capital is. And that's really because it's at the early stages. I might just kind of add, on the impact investing side, I was involved in a fund called North Star Impact, which I've recently left, but I was involved in that since 2017. I started that with someone I met at AMP, and we invested in a whole range of impact areas, very little actually in ag, but across healthcare, pharmaceuticals even, in water, plastics, quite a lot of environmental stocks, renewable energy as well. So that's a little bit about myself. What I hope to cover off today is really what is natural capital, where has this capital idea come from, where's natural capital come from, what are the drivers behind it. And then the second half, I really want to talk about the natural capital markets, the creation of them, what's driven the creation of these markets, and then kind of look at where we're at today with those markets, and then delve into the two obvious ones around natural capital markets, which is the carbon market, and now the newly formed nature markets, and how those have formed, where they're going, what they're starting to look like. And then I'll kind of wrap up and talk about what it means for farmers, what farmers might need to be thinking about, what are the positives of there, which I think there are lots of. All right, so let's kind of go way back and almost to history of natural capital. I don't know if people know about Adam Smith. He is a Scottish social scientist and philosopher back in the 1700s, and he wrote The Wealth of Nations, which you learn in Economics 101 when you do that at uni. And there he started to talk about capital for the first time, labour as capital, and this is one form of capital. Clearly, as the Industrial Revolution has got going since the 1860s, capitalism and financial capital and the distinction of those capitals started to emerge. So you have financial capital and labour capital and all the union movements around labour as one of the many capitals. And since then, you've had social capital emerge, intellectual capital, cultural capital, and obviously manufactured capital. So this is obviously what's produced. And now we have natural capital that's kind of evolved. And it's an economics term, and the economists really started to drive at this out of a bunch of serious problems, obviously. We've got climate change and a warming planet and carbon up in the atmosphere. That's driven really the idea of carbon markets. Well, how do we get it out? And now we have failing natural systems and biodiversity loss at extreme rates, and that's driven the nature market. So it's an economic term, and it's all around value, tangible and intangible value. And when you think about value, that if you think about farms, you've got the value of the land increasing, and then you've got cash flows that come out of it. This is where the financial markets start to think about, well, the land is improving, so you've got this, and you can sell it for more later on, and then you've got your business that's running, the cash flows that come out of it. That's the thinking about the value element. But then there's a whole lot of intangible values from natural capital. And so let me just pause there and actually read a definition. That might also just clarify what this thing is. So natural capital is the natural resources and environmental features in a given area regarded as having economic value, which I've talked a little bit about, or providing a service to humankind. So the providing a service to humankind is the interesting bit, which is this intangible thing that capital markets are free riding. They're using this and destroying it as they start to think about the rules and regulations and the boundaries in which they operate in. So, often people think about those free riding or those intangible things as the commons or the public good. There's no price attached to that. You can't trade that stuff. So I think this is where it rubs up against financial markets and what is good for society and what is not. So let me take another quick perspective before we get into the elements of natural capital. I see kind of four stakeholders in this conversation about land and value and they're four kind of perspectives. You kind of got government who are stewards of our lands and our country. They think about livelihoods that derive from our natural resources. They're now thinking about climate change and species loss. And they set the rules and the regulations around what you can and can't do. So one of the solutions, rather than getting into capital markets and getting a price on carbon and a price on nature, is just have more rules. And you can't do this, you can't do that, you can't pollute, you can't operate a coal mine, we're shutting you down, or you can get markets to help solve these problems. Close to governments, obviously, community and the citizens. They obviously enjoy the recreation, our natural resources, national parks, and they're also thinking about the long-term stewardship of the country and the natural resources. They really want improved water, land, air, cleaner air. They want a better environment to be living in. And then you come to business and investors who really don't think about this stuff at all. They really play within the rules. They want to maximize their returns and not break the law. And they're the ones, I guess, if you think about capitalism, they're the ones who have really destroyed our natural capital and resources. So clearly all these resources are getting depleted, and we've got a problem here. And then you kind of got farmers in terms of this conversation who really also want to steward their land over the long term. They want to be passing those farms on generation to generation. They're obviously thinking about profitability and livelihoods for their families and their communities. And they're the ones who are really in touch with nature. They're living in it every day. Some of us kind of go in and out of natural capital if we live in the cities. But what I'll talk about next is really all the elements that are touching in both economic and intangible, what are touching in on natural capital. So, as I say, I think there's tangible and intangible elements to natural capital. The four kind of building blocks that I see in natural capital is land, both above land and below land. It's obviously our mountains, our farms, the flora and fauna, the animals, plants that are running around, but also things that are deep under the ground, the heat that might come from geothermal energy. All those properties are the natural capital elements of land. Secondly, we have fresh water, so it's our rivers, our lakes, our streams, salt marshes, all those watered areas. And then there's obviously the air and the atmosphere, and the sun and the wind, all those resources. And then oceans, obviously our coastal areas, our coral reefs, sea life, beaches, all those, and the deep seas, obviously. These are all the elements of natural capital. Those are the tangible things that you can point to and touch. And then you've got all these intangible elements. So you've kind of got ecosystems and what they call ecosystem services. So they help our lives. Pollination is obviously one. So you've got bees running around. All these things that are difficult to quantify, but they're happening and they help our whole system. You've got the hydrological cycle and rainfall and what that does to water systems, biodiversity, which is this thing that everyone's talking about that's in crisis. You've got the carbon cycle that's moving carbon up and through. So these are all quite intangible and difficult things. And as we know now, in carbon and in nature, people are starting to price those. We're saying, well, these are intangible things. Let's start putting a price because we can maybe solve some of these problems. I'll get onto the markets in a minute, but just one quick comment on that. The governments, clearly these are public goods, and it's really governments that should be looking after these public goods and protecting these things. But most governments are fighting debt. We're hearing about the US economy that's bankrupt. Our debt bills are rising everywhere. It's happening. And they can't fund these things. So they look to markets and say, well, maybe these guys, these massive pension funds around the world, with some are now in the trillions, maybe they could help. Let's start to price this thing and get some systems going, and they could put money in. Well, how do you do that? Through pricing signals. So let me just quickly touch on, related to those four elements of land, fresh water, oceans, and the air. Obviously, there's lots of economic activity. We all participate in those things. So in terms of land, we've kind of got national parks, forests, farming, mining, property development, building our cities, our towns, our communities. You've got transport, forestry, industry, all those kinds of things operating in the land. In the air, obviously the airlines and satellites, obviously a big new industry operating in space. And then you've got wind and solar now participating in air. in fresh water, you've got water supply, transport down our rivers, hydro energy, and obviously then there's nature and recreation. People are participating in that. And in the oceans, obviously, you've got a lot of shipping. You've got fishing, now wind and oil and gas industry all operating in the oceans, recreation and tourism. So you've got all this economic activity playing in here. A lot of them free riding, saying, I can get away with this, I'm using this resource for free, and we've got this degradation. So the ACF, the Australian Conservation Foundation, did a report, and they've said that 16% of Australia's GDP is generated by nature. So there's a lot of GDP coming out of our natural systems. I suspect the number's higher, but this is the number that they've got. And they reckon 33% of our GDP has a moderate to high dependency on nature. So if these systems collapse, and the way we're heading, we've got a problem, and all these industries are at risk. So therefore, governments interested in trying to solve them. Governments around the world, and there's a lot of movement, and I'll talk a little bit about what's going on as we talk about markets and what's happening in natural capital markets. But clearly people are saying, hang on, well, a group of people are saying, hang on, we've got to stop here. And there's lots of pressures around jobs and industries. And the four big ones, I think, in terms of industries are agriculture and fisheries, mining, forestry, and pharmaceuticals. Those are the big ones drawing out of natural capital, big dependencies going on there. But clearly, just about every industry has some connection and dependency on nature. So that's kind of the part on what is natural capital. We can either pause here for questions, or keep going, and we can pick them up at the end. Or
what about tourism?
Yeah, very big use, obviously, in right across water, land, and oceans. Yeah, and you know, depending on where you come from, causing a lot of destruction, a lot of issues. So complicated. So where does this all come from? We talk about markets. How do the markets get created? Where have they come from? What are the drivers? So kind of going back to what I was saying early on about capitalism and the Industrial Revolution, 1850s, the capitalism really starts to move in the 1950s. You get massive growth. The US, and now we see China and India all coming. Huge systems driving, and obviously population growth is driving a lot of economic activity and using these resources and impinging on natural capital in quite a big way. The WWF, it's a pretty well-known stat, but 70% of our biodiversity or natural nature has been destroyed since 1970. That's a big number. That's a big drop. And now we've got a baseline that's much lower, and it's continuing to fall from there. And obviously climate change, scientists way back, but even from the 70s and 80s and 90s have been recognizing rising ppm. You know, I've been watching it since, probably 412 parts, and now it's 422, 23, 24. It's just rising. And I think will continue to rise at least to 2030. So we've got climate change and rising carbon dioxide and other greenhouse gases. So we've got this problem that's driving. So there are kind of two schools of thought coming out of this. One is let markets help. Governments are bankrupt. Let markets help. Let's put a price on carbon. Let's put a price on nature. Or the other school of thought is, you know, no one should be touching this stuff. This is nature, and particularly in the nature markets. Why are we commoditizing this and letting it be financialized? And we know what happens in the financial system. This stuff just then starts to move. We can trade it, and people start. We're seeing that in the carbon market. Well, people are just buying carbon credits to get themselves out of trouble within the rules that they can. And people are now saying, well, hang on, this is not the way forward. They need to be doing insetting and doing their own work to decarbonize. So these things can unravel pretty quickly and out of control of the regulators. So people saying they shouldn't be participating. Anyway, the horse is bolted, and these markets are now developing, and this is driven out of, I mean, the UN, but the Europeans are really driving a lot of this and way ahead even though I think Australia is leading in many areas in natural capital and has an opportunity to further lead, if you believe this is the way to go in terms of markets. So, you know, the economists want to kind of put a price on everything. Prices send a signal, it's too expensive, you get out of it, it's cheap, let's get into it, and equilibrium then recreates itself. So solving problems through capitalism and markets and pricing is one way to do it. If you can't over-regulate, and clearly government are playing both. You've got the new nature repair bill that's really creating nature markets, and you've got the carbon legislation and net zero targets, you know, to 2050, and then you've got targets of 43% by 2030, as they're saying, and the safeguard mechanisms requiring all the big polluters to stop polluting, so they're coming in with regulations and laws, and then they're playing with markets and saying, well, the markets can operate. So you kind of got these two systems playing here. So I should also kind of go back and say, well, in natural capital, these markets are quite old. If we think about land has been bought and sold forever, and water is relatively new. People are buying and selling water, and the water market exists in this country and in other markets. But the new markets of air and pollution and carbon is pretty new. Oceans, there's lots of things happening in blue carbon and in other markets in oceans, but it's largely untouched, and there's a lot of damage. I've done a lot of work in oceans, but there's a lot of damage being done. There's a lot of free riding going in there, dumping things in the sea and what's happening on our coast. But now, and then biodiversity, obviously, this is a very, very new market. It's probably 10 years behind the carbon market. Anyway, we'll talk a little bit about those markets in a minute. So as I say, I mean, companies have been, those that are doing legal stuff, a lot of illegal stuff done, certainly in other parts of the world, but a lot of companies operating within the legal boundaries and doing a lot of damage. If you think about coal and gas and all these kinds of companies. So where are we at with these markets? So let me just say, you know, Australia is a very big place with a lot of natural capital in terms of land and our oceans. So it's got to participate in this. It's got to be a player, and I think they are leading. So I think about, you know, Canada and Brazil and all these places, and in the developed market, there's not obviously Central Africa, lots of forests there. I mean, but those countries are struggling. Their markets are nowhere. But I think Australia is very well positioned. All the thinking that's going on here, and in Canberra, and in markets. You know, I think the super funds, the asset managers are all getting their heads around certainly carbon markets and this whole idea of sustainability through E, S, and G. I talked a little bit, for those who were listening to me yesterday, a little bit about how that whole system cascades, what's going on and coming out of Europe and the UN, and how slow but important and big and complex it is. Yeah, so there's a lot going on. ESG is environmental, social, and governance factors that investors think about when they think about investing in a company. So rather than just how do we make money, how do we maximize money, this thinking has started to come in. A lot of investors will say, well, we've always thought about these things because they're risks. If there's an environment that's going to collapse, or it's causing too much damage, and there's going to be fallout within those communities, we need to be thinking about those. But it's now integrated into a lot of investment decision-making. And I was saying yesterday, 33 trillion of the, certainly in the equity markets, which is about 120 trillion around the world, all the companies are listed on the exchanges, about 33 trillion, roughly a third, now incorporate all those factors into their decision making. How are we going for time?
Yeah, good.
Good, okay.
About another 10 minutes.
10, okay. So let me quickly kind of go through where we're at with this. Obviously, agriculture, half or 55% of Australia is now farmed. Climate change is very real. Farmers are concerned about it. There's variability in their earnings. I saw one stat out of a great report that the MacDoc Foundation put together, Farming for the Future. They were saying over the last, I think, 20 years, earnings were down about 20% for farms. That's the earnings coming out of agriculture, not the uplift in the value of that property, what I was talking a little bit about earlier. So there's variability, and climate's causing havoc and will continue to cause variability in earnings. And that's not good for them or the supermarkets who want their supply. And it's not good. In terms of water and rivers and our lakes, these are obviously getting polluted, overused. There's a water market. There's scarcity, and drought obviously causing problems with that. And then obviously we've got climate change and biodiversity loss that I've talked a lot about. But the government are now responding. So in the climate space, they've done a lot of work and listened to what's gone on internationally. They set up the Clean Energy Finance Corporation, an arena. So the 20 billion that's gone into the Clean Energy Finance Corporation. Debt funding, so that capital is recycled into renewables and trying to decarbonize and sequester carbon. And they created the carbon markets. There's a way for people to trade those. We'll talk a little bit more about that. There's obviously the net zero targets I talked about. And then nature. I mean, you've got the big nature COPs that the UN run. They've been going for 16 years now. They've now set some policy and direction, these protecting 30% of our oceans and our lands by 2030. So they're quite ambitious. This is 5 years away. There's a lot to be done. But that's the policy setting. And then you've got the Nature Repair Bill that's setting markets so people can trade. And now this Nature Positive Act. So it didn't get through the current parliament. They were trying to push it through. But that's really setting up a new EPA, giving them more powers. There's a department for collecting a lot of the data. So it's kind of helping move along and regulate and look at all this stuff. So the government is starting to act and putting capital in. I suspect in time we will get some capital like in the Clean Energy Finance Corporation, or maybe that'll evolve an arena which have got a lot of money and it'll get put into nature. People say, well, this is the size of the problem. As I say, I think they're 10 years behind, but we need to now sort this problem out. Who pays to sort this problem out? How do we work with farmers? Clearly starting a market like the carbon market, now they've got the nature market, and people are starting to create instruments. And you had a question?
Yeah, just when you talk about the market, and we're allowing the private sector effectively to set a price within that market, do you personally feel that that's a good way to go, or should there be governments and setting prices that creates a pain for those creating issue and better results and push for those that want to make change?
The question was whether government should be setting a price for these markets, or should really let the market set that price. Is that the essence of your question? Yeah. And I'd be favour for a regulated, especially as you iron out all the issues, so that there's price certainty. So it could be reviewed every 5 years. So it's sitting at $38 yesterday. It's shot up from 33. It's suddenly spiked and come down to 38. And that's difficult for people to manage. People in the market say, well, it's great. Made free money. I bought at 25. Got now 38. I can sell and you're trading the stuff.
That's a little bit what I mean.
Well, if you regulate. So if you say it's $30 for the next 5 years, it's then going to 50. Let's see what's going on internationally, because people will arbitrage. And they can in some markets. The Puro market, you can go into the international market. The Euro market's probably sitting at 4 times at 120. There are many different markets around the world they're not harmonized today. There's a California market, Singapore has a market, New Zealand. China has a quasi-market, the Canadians have a quasi-market, we have a market. So they're all looking at the stuff, creating markets, but they're not harmonized. You can't trade. But to your point, it's moving away from where you would like to go, and I think we should go as we develop these, because I think it's very early days in terms of it's a 50 or 100-year history of trying to get all that carbon out of the atmosphere. We're just starting. And big one? One planet. And should have one market. So very, very early days in getting this right. And I think some control of what happens rather than just let people come in. And I'm sure there's stories about proponents or developers coming and wanting a good slice of your carbon credits. And I'll talk a little bit about that in the end. I'm conscious of time, 5 minutes. Let me quickly get to some key points. So you've got the safeguard mechanism coming in terms of the government. So the top 20 polluting assets in the country, facilities, all having to drop their carbon emissions by 4.9% every year to 2030. That's going to drive lots of carbon credits into the market. So there's a big supply, big shortage coming. So I think that very early days, the kind of rules are changing. There's lots of reviews trying to fix the market. But I should say, I mean, all the analysts all think the market's going north. And if you think about what the job to get the carbon out of the atmosphere is so massive, we need more of this. So that the supply is going to come on, and with the safeguard mechanism, you've got all these corporates having to get their carbon emissions down. They're going to be short, and they're going to have to come into the market. So the price expectations are to go through the roof, and that's why a lot of these big institutions are buying carbon credits to bank them at. We've just about to close a deal at $29 to sell, which will be great for us, for a group I'm working with, Forever Wild. At $29, the price today is $38, so they're already in front, and it's going to go north, and they'll do very well. So they're just banking the stuff, but it's helping us fund a property that we're looking to buy in WA. So let's go back to markets and what it means for farmers. I think it's a good thing because you can get additional income and you can fund activity in both carbon and nature credits, so it's additional income. It's helping you manage, if you're doing regenerative farming and getting those credits, it's helping improve the farms themselves and then iron out the cash flows and the variability in your income. I talked a little bit about that yesterday. And then it's obviously reducing the risk of your operations. I'm going to skip this other slide here, which is pretty complex, which is how all the markets have happened internationally and driven into what we're talking about today and what's happening in Australia, both on carbon and nature, but very happy to talk to anyone afterwards. But there's let me just say, there's lots of organizations and initiatives and people getting together trying to make this happen. In terms of the carbon market, I said I'd just talk a little bit about carbon and nature market. I've talked about the safeguard mechanism driving these big polluters. Anyone over 100,000 tons of carbon will be captured by this, and they've got to start this decarbonisation process by law. So it's all monitored through the Clean Energy Regulator. Typically, they look at what they call insetting. What can we do internally, putting solar on our roofs to reduce our carbon, our Scope 1 and Scope 2. And this is only for Scope 1 and 2 carbon emissions rather than Scope 3. But this whole offsetting market is quite controversial. There was a review by Professor McIntosh that looked into the whole market, made a whole lot of recommendations. Most of them were accepted. So again, it's just ironing out some of the kinks in the system. And I suspect there'll be more reviews, more problems, people trying to work through it. The land-based ACCU market, I mean, there's about 100 million ACCUs that have been issued. 50% of those in New South Wales, 27% in Queensland, so that's where all the activity is going on. The other states are much, much smaller, but that's 3/4 of it between those two states. So lots of projects obviously going, registering those with the Clean Energy Regulator. This stuff's can be quite expensive, so I think this has been the issue for smaller farmers. The knowledge about how to do it, and then this is where the developers come in. Well, we can do it for you, can fund you up front to do a baseline, 30K, we'll fund that, but we want, and then you're up for the next 15 to 25 and even 100 years to make good on those carbon credits. And this is what I think one of the issues that farmers need to be very aware on the liability, both in the carbon and the nature markets. Quickly on nature markets, I talked about the two bills that are driving the market and what's going on there. You've got this new federal EPA coming. I think that's going to be quite interesting how they work with the states on that. You've also got lots of financial institutions starting to go up the curve, as I say, I've been advising some of them. And then groups like the Responsible Investment Association of Australia, RIA, and ASFI, the Australian Sustainable Finance Institute. They've now got working groups on natural capital. How do we work this out? How do we define nature and natural capital? Carbon's easy. Just come back to a unit, CO2, tons of CO2 equivalents, quite easy. Nature's very different. Biodiversity, it's actually about biodiversity. So biodiversity in one region, growing cherries here, or cattle up in Queensland or the territory, very different what it is. So the measures, clearly all about measuring in order to get a credit, to get money for it. How do you measure these things? So this is, I think they're grappling with it and haven't really found a solution. But all these working groups are going on internationally. Australia feeds into a lot of the international groups. And as I say, Accounting for Nature, which Ken Henry's been a key proponent of, that's driving some very interesting stuff around the accounting for stuff, and we're kind of world leading on that. Let me quickly wrap up. Yeah, so as I mentioned, early stage, I think it's about creating awareness, educating yourself, talking to people, groups, getting specialists to help you through it. And there are organizations that are doing that, not as developers, but just as information providers. Clearly, the risks are not going away. These problems are not going. The markets are coming, and the markets are going to grow in size. And there's opportunity, obviously, for farmers to participate in the right way. As I say, I think inevitably there's going to be teething problems. So to be aware of this variability. So to your point, having some certainty in price would be a helpful thing. I think in terms of credits, it's clearly a way to get additional income in. It's attached to farming income, so there's value for farmers, there's opportunity for and all the other benefits that I mentioned from doing the right thing. I just kind of that Future for Farming report. They took a small sample. I don't know who's read it or who's across it, but they took a small sample and looked at the earnings income improvements from regen farming. And the sample that they took was from 40 to 83% increase in earnings from the regen activity. Clearly, I don't know if carbon credits or nature credits were in there, probably not nature credits, but there's value uplift from doing the right thing and looking after your land in this way. Things to just be aware of, just to get very clear on where and how you can enhance your natural capital and where you can do carbon farming. Clearly, a place like this, there's, it's looking pretty good. There's probably not a way to increase your carbon stores and get carbon credits for that because the work's already been done. Understanding what's the cost of doing this and being very clear on that, and then obviously watching your liabilities, getting some advice around those and being very clear what you're getting yourselves into. Understanding how to generate those credits and where you're going to register those credits and get the uplift to create additional value. And yeah, that's pretty much it. Take some questions. Yeah. Lots of hands.
So I'm asking the first question. Thank you so much, Mike. Really fascinating, and I think we could talk all day about this stuff. It's such a fraught subject, I think, for many reasons. My question is, I guess the impact on small farmers, number one, who are already doing the right things. What you've already spoken about, what's in it for them or not. But will this form of capitalism, and I think it's already happening from some anecdotal accounts, lead to a new form of, I don't want to use the word, but I'm going to use it, colonialism, in terms of land grabbing, and where are people's rights to land going to come into all of that? If you can just speak to that for a sec.
Yeah, two big and kind of tricky questions, but I think what does it mean for small farmers? I think, depending on what small is, the unit cost to do this can be prohibitive. If you say less than 100 hectares, we try to get a group of 10 farmers to do 10 by 100 to get 1,000 hectares to submit for a carbon project. This is 7-8 years ago, and couldn't get it up because of just the economics didn't really work. So how do farmers get support? We went to Woolworths to say, what if you funded 300 farmers? We thought the baselining cost would be 30,000, get them going. Couldn't get that up. They didn't want to give us the money. So trying to help farmers get that initial cost to get going, get across it all. So I think that it can be tricky for small farmers. Obviously, if the price gets to, and it's going north, I'm pretty certain it's just about when, but if it gets to 50 or 100, well, then it's very worthwhile. At $20, where it's sat for a long time, very difficult. As soon as it comes, what they say, in the money, and at $38, we worked out you really needed it to be $30 to make sense to start on that particular project, the price. Now it's at 38, let's go 50, 75, 100. Well, the income that you're going to get later on from doing the work, what makes sense? Let's get into this. So timing, understanding what's involved, the cost, as I mentioned, to do it, and the obligations is important. On the colonial question, I think that's right, and it depends on your philosophy on who owns land, who should own land, whether it's a common or it's private ownership. But I think this is one way for capital markets to, again, have a hold on landholders. And I think once it starts to trade and get into the secondary markets, which the ASX is setting up right now, they're just about to release it, actually. I think it's been in the works since 2021. They're working with a group called Trovia to make it tradable ACCUs in the compliance market, not the voluntary market. I didn't talk a lot about that. But to trade ACCUs on the market. So it starts to then become a tradable commodity. There are a bunch of funds, some going under the label of impact funds, that are just acquiring land for carbon credits. They looking to then not do the carbon work. So this particular fund that I know of is getting Greening Australia to come in and plant trees, get the carbon credits for that. They're not as interested in the risk, which is really the hard work and the cost and the risk in farming, in agriculture. It's just about land for carbon credits because there's money and there's a future in that. So that can work, and they're playing again within the rules, but it's not really going to someone who owns a farm who wants to create that value for themselves. This is their asset. that they've done. So it's how to help smaller farmers get to that and benefit from that in all the ways I touched on this morning.
And just remember, paraphrase the question.
Okay. Okay.
It's sort of a follow-on. Thanks very much, Mike. I'm really interested in how nature repair markets develop, and your contact, I suppose, with investment managers and their mandates and things like that. Carbon, as you explained, is reasonably straightforward from their perspective, I guess. But how does capital mobilise out of sort of investment managers to the major capital markets, given that it's very difficult to measure, say, vis-a-vis carbon, and it's not accredited the same way as carbon? Your thoughts on that?
Yeah, so the question is really, how does the large end of capital markets participate in a system that's not being measured very well? Two things I'll say. The measurement, certainly in nature, is problematic, and lots of people are working on that. In carbon, it's relatively straightforward, and there are kinks in the system, but it is getting measured. You've got to baseline physically, get a reading of carbon, do the work, measure again. What's the delta? What's been an improvement? Has the soil, in the case of soil carbon, been improved? Yes. Claim the carbon credit. Register with the Clean Energy Regulator. That is now the ACCU that's issued and can be sold and traded. In terms of the big end of town, as I say, under the safeguard mechanism, all these facilities, and so you might have one company, they might have 3 facilities, say an energy company is running a coal plant and coal mine, and they've got many of these. There's a huge, they've got millions of carbon credits to units to decarbonise by. So they're looking for projects, but it's happening to all. I'd say the ASX 200, all of them would be participating in trying to decarbonise and register this project. You can go onto the Clean Energy Regulator website and have a look at who's there, what's been registered, which are in the market. I don't think they disclose price, but
how does that work though in nature repair markets?
nature, it's literally got established in 2023 through the Nature Repair Act. So it's very early days, and there's nothing really being traded. I mentioned a carbon, a nature unit we issued with Forever Wild. So we've created these verifiable nature units that are then audited, that the work has actually been done, and they're issued through a platform called B Impact. I suspect there are going to be many of these platforms. This is our way, this is your way, this is a verifiable nature unit. Someone else will call it something else, and you've had this in the carbon markets. Then there might be some national regulated once the measurement has been sorted out, and those can then be traded, and maybe again the ASX will set up a system to trade these or run off the back of the carbon one. But I think all the big super funds, the banks are certainly, well, I know of 2 banks that are banking carbon credits. They're looking for projects and buying those carbon credits and funding those. Forever Wild, one of the properties we purchased, we did a deal with them. It's quite market leading. So they're buying all these carbon credits to bank them in the hope that they can profit in the future, and then on-sell them to all these organisations who can't decarbonise but they need the credits.
We've only got time, really sorry, one more question, but would you be available, Mike, afterwards?
Yeah, very happy to chat, yeah. Oh, sorry, we can chat afterwards.
Mike, thanks so much for being here and for your presentation. A very quick comment, just that there are voluntary markets that are developing that value existing natural capital stocks for people that have been doing the right thing for a long time or happen to have a lot of wood. And the question I had was just whether you could touch very quickly on Indigenous benefit sharing and how that plays into the Australian market.
Yep. So voluntary markets was the question, and the observation, and Indigenous benefits.
Indigenous benefit
Indigenous benefit sharing. Let me quickly explain. In Australia, you have the compliance or involuntary market, that's safeguard mechanism, ACCUs, and then you've got the voluntary market. Lots of people participate that in what they call over the counter. You can strike a deal with anyone outside of the compliance market to sell your carbon credits. Typically, and there's a whole lot of standard, the gold standard, the Vera, lots of people doing verification on those things. So in the voluntary market, you've got a lot of what they call stapling of benefits to the carbon credit. So you might have a social benefit, you might have, you might have an indigenous benefit, all sorts of benefits, co-benefits that come with that, and you can staple value to those. A good example is savanna burning. So there's carbon benefits, obviously, from savanna burning. So there's carbon credits, lots of those. A group called Corporate Carbon doing a lot of that, and now doing lots of work in Africa, helping them in the savanna areas of Africa. But in Australia, they're working with indigenous groups who clearly know all about savanna burning and attaching additional value to those carbon credits and giving an uplift. So it has a different market, so it's not the regular ACCU, but let's say it's $38 or $40 for the carbon piece. And then people attaching additional value, another $20 because you're working and helping indigenous communities, creating jobs and roles. And so companies will pay a lot more for those. In the oceans market, we're getting prices of $600 to $800 for a credit, for a blue carbon credit, because of the work that's been done and how hard it is in the oceans work. So there's big prices being paid on top of just the carbon work. The work we've done at Forever Wild, there are co-benefits there that attach to those nature credits. We're working with indigenous people who are sharing their knowledge around protecting the mallee fowl, and so that they're getting paid for their knowledge sharing for the work that's being done attached to those credits. So we're looking for 150,000. We've sold 3,000 units at $12, got about 30,000, and we're needing to get a whole bunch more to finish the program. But we're working with indigenous people. It's all getting documented how to do the work, and so there's an element of indigenous people's benefits there attached to that.
Thanks, Greg. No